Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. Welcome to Next Level Charting. This is the show for Thursday, May 28th. And today we're going to look at EMAs versus SMAs, in particular the 50-day. We've got those indicators, percent above the 50-day for the S&P 500. We'll look at the lead versus the lag in these moving averages, and then I'm going to backtest signals using both of them. So I'm going to start off with two charts that show the percentage of stocks above the 50-day EMA for the S&P 500 and the 50-day SMA. So we've got the percentage above the 50-day EMA in the lower window and the percentage above the 50-day SMA in the upper window. And the reason I'm showing these two is because, usually they're pretty much in sync. But when you get some volatility in the market like we had in March and April especially, then you get a dislocation between these moving averages. For the most part, they pretty much track each other, but the differences do grow when you get these big moves. And you can see that on the chart here. Here we can see the 50-day EMA and SMA. The 50-day EMA is in green, SMA is the red solid line. And they were tracking pretty good during the advance. And then you can see when we had this sharp decline, they started separating. And then when we got the sharp rebound, there was still a big separation. The EMA was much lower than the SMA. But as the market rebounded, we'll see in a minute with some individual charts, the EMA turned up first. And look at the SMA. It did not turn up until early May because it was still factoring in this part of the decline on an equal weight basis because an SMA treats every price the same, whereas the exponential moving average weighs more recent prices heavier. So this advance here carried a heavier weight in the EMA than it did in the SMA. So that's why you still had a falling SMA in early May, but you had a rising EMA. And so if we look at these two charts here, we can see that the percentage of stocks above the 50-day SMA is above 90%. And it got above 80% about a week or so ago. And you can see the percentage of stocks above the 50-day EMA have yet to get above 80%. And that is because the EMAs have started rising. They've been rising for about a month now, whereas the SMAs only just started rising over the last few weeks. So in general, for signals, I'm using this as a breadth thrust type indicator. I'm looking for a big move above 80% to show some serious upside participation. 80% of stocks are above their 50-day SMA here or EMA here. And this happened there in late January, early February. And you can see the bearish signal in 2018 in October when both plunged below 20%. And that means a lot of stocks are participating on the downside. So this bullish signal that occurred in late January 2019 stayed bullish until late February when we got bearish here with that downside thrust. Now you can also use this as a mean reversion indicator. And you can see when it gets into this 30 to 50 area during an uptrend that can sometimes lead to a bounce here. So that's kind of your mean reversion opportunity. So where are we now is the question. Well, right now we're in the midst of some sort of a breadth thrust with the percentage above the 50-day SMA. And we're almost to that breadth thrust with the percentage of stocks above the 50-day EMA. So we're seeing a lot of participation in this advance. One more thing to note here is you can see that there's that 50% line, and we held above it during those May dips, whereas you look at the percentage above the 50-day EMA, we had some dips below it. And I'll show you why that occurred looking at some individual charts. So I've got some charts here of the largest stocks in the S&P 500 with the 50-day EMA in green, the dashed line there, and the 50-day SMA in red. And I've also got the PPO 150 in the indicator window. And that basically turns positive when the 50-day, when price is above the 50-day EMA, and negative when price is below the 50-day EMA, because the PPO is based on EMAs. And what we can see here is at the beginning here in the middle latter part of February, the EMA and the SMA were pretty close together. But then we can see as this decline accelerated here in March, the distance between the two grew. The 50-day EMA was pricing in this decline much more because it was weighting more recent prices heavier, whereas the SMA was still weighting the prices back in February equally, and the weighting for the EMA on those prices back in February was less. And then we had this big rebound. And you can see on this rebound here, the EMA started turning up there in mid-April. And we can see price got above the 50-day EMA in mid-April and pretty much stayed above into May. And the 50-day SMA continued down and just started turning the corner there in early May. And this is for Apple, one of the stronger stocks that we've seen recently. So you got the big decline and you got the big advance. And you know, at this point, the 50-day SMA is treating all these prices equal. You know, there's about 50 days going from the 21st of February to the 4th of May. This is about 50 days, not the entire chart. I put a week in the beginning and a week extra at the end. But you can see that the SMA is treating all these prices equally, whereas the EMA is treating the second half with more weight because the second half, this uptrend is more recent. So that's the way exponential moving averages work, for better or for worse. I mean, there's positives and negatives for both. One is not necessarily better than the other, and I'm going to back test these moving averages coming up. So when we go back to the indicator that I showed you, the percentage above the 50-day SMA versus the percentage above the 50-day EMA, and the reason it is higher for the percentage above the SMA is because it is much easier to cross a falling moving average when price is rising. So basically you have price rising and the SMA falling, and you have the EMA rising, so it's a little bit harder to get above a rising EMA than it is to get above a falling SMA. And this is Adobe, and you can see Adobe moved above its 50-day EMA there in mid-April and has been above ever since. Now this chart just goes to the 11th, but what I can do is I can go ahead and make these to the current date. So I've just opened this chart now, and I'm going to select a time frame, and I will pick 4 months on that, and I will click Update. And then I'm going to go to the bottom, and once I've got the way I like it, I click Apply Style to All. And it asks if I want to do that. I say OK, and then I say View All. And so now I've got all stocks updated until today. And you can see that, and this is another thing I was noticing yesterday, there were a number of intraday highs, but closes off the high. Adobe hit a 52-week high intraday and closed weak and is down today. So money is moving out of software. Kind of got a rotation going where you are rotating into the big tech names in April and May, and you're rotating out the last 2 days as banks and retailers and some others pick up the slack. Amazon, it held up very well in March, and you can see its SMA just flattened, didn't have much of a dip, but it's getting hit the last 4 days. Berkshire Hathaway was part of the reason the finance sector was so weak. I mean, look at its 50-day SMA, falling, 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 and it's just now starting to turn the corner. Same with the EMA. The EMA price just moved above the 50-day EMA there. If we look at Cisco, there's the falling 50-day SMA, and it was falling until early May and then turned up, whereas the EMA started turning up in mid-April. And you can see all these moves above the EMA in April and early May. A lot of crosses there. Disney, similar situation. EMA starting to turn up a little bit earlier, but not much earlier than the SMA. And Facebook getting hit the last 2 days. But the SMA was falling and started turning up there in early May, whereas the EMA started turning up in late April. So now I'm going to move over to Amy Broker and show a back test using the 50-day EMA and SMA. First, I want to show you some typical signals for a cross of the 50-day SMA. This is Gilead, and you can see here that it's just one big whipsaw from May 2019 until January. The green arrows are crosses above, the red arrows are crosses below. In the indicator window, you can see the red bars are when the close is below the 50-day SMA, and the green bars when the close is above the 50-day SMA. So a lot of whipsaws there, so you're probably really tired of this stock in January 2020, and you say, I'm never going to trade it again. And then you get the best signal of all, the cross and a double-digit gain there. And that's the way these moving average signals work. You're going to get a lot of whipsaws, and your gains are going to outpace your losses, but you got to live with those whipsaws, and I'll quantify that here in a minute. Now here's Apple over that same time frame, and you can see it traded much better because it trended higher. And that's what's important is the 50-day moving average cross. You need a good solid trend in order to be able to profit from a strategy that uses a cross above the 50-day. And here you can see Apple, there's a cross and a nice move, pull back. But look at this cross in August. That's a huge gain. You got out in late February and you missed this decline. You got a little whipsaw in the first half of April, but you caught a good signal here. Maybe it's due to pull back again. So Apple looks a lot different than Gilead. So what if you took every trade for a cross above the 50-day SMA or EMA in the S&P 500 over the last 20 years for those stocks? Well, I've got the SMA on the left and I've got the EMA on the right. And first of all, if we look at the number of trades, 85,000 for the SMA and 95,000 for the EMA. A lot more trades for the EMA, which probably means a lot more whipsaws. Winners, around 28% for both, and losers, 72%. So a lot of whipsaws if you're looking to use this type of a strategy. If we look at the average gain, it's around 8% for the SMA and 7% for the EMA, smaller. And then we look at the average loss, it's around 2.5% for the SMA and 2.3% for the EMA. So not great for either one, but I would say the SMA is a little bit better. And if you want to learn more about market timing and trend momentum strategies, be sure and visit trendinvestorpro.com. I've got a couple bonuses running for StockCharts members. If you sign up as a subscriber, you can get the ETF Master chart list to your StockCharts account and the Essential Breadth Indicator chart list.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.